Hey folks, welcome back to another SPY options update. I'm going to be away on vacation for a few weeks. So today on Tuesday, April 11th is the last day I'm going to be making trades until I get back in early May. So I have this dotted blue line here on May the 12th, which is a Friday expiration, and I'll be back by then to manage my trades. So what I want to do today is, instead of just having like a daily or weekly option, I'm going to trade options expiring on May the 12th. So this will be like 1 month out from today. In terms of where the price can go to, well, I kind of have these two channels here. This downward sloping channel looks like we've broken out of since the beginning of this year. We came back down to retest the top of the channel, and it looks like there was a nice bounce, so that's bullish. And in the shorter term, we have this upward sloping green channel that is also showing bullish signs. You can see it went from the bottom of the channel to the top. Didn't quite get to the bottom here, but it reached the top and then it hit the bottom here. And now it's sort of in the middle. A new CPI print comes out tomorrow. If that is better than expectation, then the stock market should rally. If inflation is hotter than expected and people think the Fed will raise interest rates even more, then the stock market will probably fall back to the bottom of this green channel first. And if it's really bad, it might fall to about 380 because that is where the previous support was, as it was at that level a couple of times before. So I think the safest trade for me to make over the next month is a put ratio spread, which is bullish, with a break even at around 380 where there is strong support there. And the reason I'm bullish is because both on the smaller green channel and the larger bearish channel, the stock price seems to be showing bullish signs on both of those. So if this rally continues, we could go up as high as the 440s or at least the 430s. Right around here, because that is where the previous resistance was. So it's going to try to retest that level. And I don't want to be bearish in case the market goes up a lot. However, I'm okay taking ownership of the SPY if it goes down to about 380. Because if it does that, I think there's a chance that it could bounce up and try to retest the bottom of this green channel before either going back into it or continue to fall further. But if that were to happen, then that's after when I come back. So I should be able to manage that afterwards. Now, looking at the option chain for SPY, I'm going to change the expiration date to May 12th and at around 380 here. So the way a ratio spread works is I can buy a 385 here and I can sell a lower strike option, maybe 382. And I just need to increase my short put position to 2. So it's a 2-to-1 ratio. And you can see I can make about 125. So I'll change this quantity to 1 first so we can see what the theoretical profit graph looks like. All right, so I basically make about $124 as long as SPY closes on May 12th above 385. And I make a lot of money if it closes at 382. Now, if it drops to 377.7, then that is my break even. So I will make essentially $0 from this trade. And of course, anything below that, I'm going to be losing money with this trade. So I basically have to be pretty confident that 377.7 is where I think the lowest SPY can go to by the time I get back. And I think that's a pretty reasonable low point, because if we assume a bearish case, then this sort of looks like a head and shoulders. The higher bump here is the head, and then we have two shoulders that are lower. So if that happens, then SPY will definitely come down to the bottom of this green channel. Now, is it possible it can go all the way down here to 370? That is going to be very bearish, but it is possible. So if the price goes all the way down to 370, which is around here, then you can see I can lose about $740. And for the quantity here, I'll set this to 2, and I'll try to get 1.24, which is the bid. So that's going to be about $240 if it fills. Let's drop this to 123. So that is for the bullish case. I want SPY to go higher with this trade. But what about a bearish case? Then I kind of want to try to make money from that as well. So I'll be selling a call spread somewhere up here where the previous resistance was back in August of last year. So that's around the 430 area. Going back to the option chain at 430 is around here. What I probably want to do is sell like a 430 call and then buy the 432 call, because I think it's either going to bounce off this 431 area and go back down, in which case would expire out of the money and I just keep the $31 credit, or it's going to shoot right past it and continue going higher. That would be like super bullish, which is definitely possible. But if it does go that high, then I obviously want to cut my losses. So that's why I am buying the 432 call, which is just a little bit higher than my 430 short call. Okay, so let's try to get 32 cents, and I'll have maybe 4 quantities of this one. I'll lower this to 31 and lower this to 121 and maybe lower this to 30.
Order partially filled. Order filled.
Okay, so all of those have been filled. That's these two down here expiring on May 12th. These two are 0 days to expiration trades that I just put in today. They're basically a bull put spread here and then just a naked put over here. Because I was pretty bullish today in the morning, I saw that it was forming like a reverse head and shoulders. So usually when that happens, it's going to go up, which looks like it is doing. So that's why I put in the 408 short put. Here, 2 quantities. You can see I sold it for 23 cents and now it's worth 3 cents. So most likely that's going to end the day out of the money and I'll make a $47 profit from that. And then the spread I sold earlier today, 409, 407 bull put. So I put that in at 12.13, which was right over here. And I sold the put starting at 409. And I bought 407 for protection. So the idea is if SPY ends the day, which is here at 16 o'clock, above the 409 line here, then the spread would expire out of the money. And that's this one over here. I have 3 positions and I sold each one for 13 cents. And right now they're worth 4 cents. So that's also going in the right direction. So these are the new SPY trades that I just made, expiring on May 12th, a ratio spread and a bear call. My break evens are 377 for the ratio spread, and let's see what the break even is for the bear call. It's going to be 430.3. So the next time I'll have an update will be around March 12th, and ideally I would like SPY to finish between here and here. 382 right down here is where I will make the most money, but I would be happy if it ends somewhere between these two ranges. So let's see what happens. Thanks a lot for watching. I'll have another update next month. Good luck with your investments, and until next time.